Signs of progress in trade talks between the US and China and a subtle shift in the Chinese policy away from deleveraging to more of a focus on growth started to take effect in February. Improving sentiment, easing financial conditions, and increasing margin loans drove the Chinese domestic stock market up over 13% in February. Other major emerging markets unfortunately weren't dragged along by that momentum, as Brazilian, Russian, and Indian stock markets all ended the month down. In the US, corporates largely wrapped up the fourth quarter earnings releases during February, with S&P 500 companies delivering aggregate earnings growth of around 12% for the last quarter of 2018. That was enough to leave that index up over 3% for the month and 12% year to date. As the US government approached the specter of another shutdown mid-month, President Donald Trump capitulated on his demand for $5.7 billion of funding for a wall on the Mexican border. Trump approved the government's annual budget, which included only $1.4 billion for spending on a border fence. Across the Atlantic, UK Prime Minister Theresa May continued to push for parliamentary approval of a deal she'd negotiated with the EU. With a 29 March Brexit deadline approaching, the most likely alternative, should that deal not be approved, now seems to be an extension of the deadline for more negotiations. Interest rates remained subdued in February as major global central banks maintained a cautious tone, and the US dollar kept drifting higher against most trading partners. Brent crude oil traded back above $65 a barrel as it rallied over 30% from its December lows. If you have any questions on this or to invest with Anchor, please contact us on sales@anchorcapital.coza or visit our website www.anchorcapital.coza.